Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Merchants Securities Co. Limited quarterly report. China Merchants Securities Co. Limited provides a wide range of businesses and services to its clients. At the core of their operations are wealth management and institutional services, which cater to individual and corporate investors alike. The company offers investment banking services, including financial advisory, equity and debt underwriting, and sponsorship, as well as asset management and investing advisory services. In addition to these services, China Merchants Securities Co. Limited also engages in trading activities, buying and selling stocks, futures contracts, and other financial products such as derivatives and fixed-income securities. The company provides margin financing and securities lending services to its clients, allowing them to access the capital markets with greater ease. Furthermore, it offers market maker and alternative investment services, providing a platform for investors to diversify their portfolios. The company's product offerings also include financial and other wealth management products, which are designed to help individuals and institutions manage their wealth effectively. With a strong presence in Shenzhen, China Merchants Securities Co. Limited has established itself as a leading player in the Chinese securities industry, providing a comprehensive range of services to its clients. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth can be attributed to two key factors. Firstly, an increase in income from proprietary businesses has been a significant contributor to revenue growth. This indicates that the company's own business ventures are performing well, generating substantial income and contributing to overall revenue expansion. Secondly, a notable operating revenue increase of 47.96% has also played a crucial role in driving revenue growth. This substantial rise in operating revenue suggests that the company is effectively managing its operations, leading to increased efficiency and productivity, which in turn contributes to higher revenue. The net income of the company experienced a significant increase from last year to this year, with a growth rate of 41.73%. This upward trend is consistent across different reports, with net income rising by 54% and 14.4% in separate instances. The substantial increase in net income can be attributed to various factors, including the expansion of operating revenue. The profit margins also underwent notable changes during this period. Specifically, the operating revenue increased by 47.96%, while total profit and net profit attributable to shareholders rose by 53.13% and 41.7%, respectively. The net income margin improved from 52.5% in 2025 to 55.1% in 2026, indicating a slight increase. Similarly, the operating profit margin increased from 52.9% to 54.8%. However, there is an inconsistency in the reported margins between page 12 and page 18, with the latter showing a decrease in both net income and operating profit margins. The company's financial performance is a testament to its ability to generate significant positive operating cash flow. The net cash flows from operating activities have consistently been in the millions of dollars, with a staggering total of $19,691,354,351.14 reported on page 3. This trend continues into CONE 2026, where the company reports an impressive plus $21,224,859,277.39 in net cash flows from operating activities. Furthermore, the net increase in cash and cash equivalents is also substantial, standing at $30,209,050,838.05. This indicates that the company's operations are generating a significant amount of cash, which is being reinvested or held as cash reserves. Overall, these figures demonstrate that the company is indeed generating positive operating cash flow, a key indicator of financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past period. In terms of debt level, while total liabilities increased by $31.56 billion, a closer look at the components reveals that short-term debt instruments decreased by $13.4 billion, offsetting some of this increase. Additionally, cash repayment of borrowings decreased, indicating that the company may be taking on more debt to finance its operations. Interest expenses have also seen a decline, with total interest expense decreasing by RMB 260 million, and interest expense dropping from $1.8 billion to $1.6 billion. This decrease in interest expenses suggests that the company is either paying off debt or renegotiating better loan terms. The increase in net cash flows from financing activities further supports this inference, implying that the company is generating more cash to service its debt. Overall, while the company's total liabilities have increased, a closer examination of the components reveals that some areas are decreasing, and interest expenses are also down. The company has a history of paying dividends to its shareholders. This is evident from the explicit statement on page 15 that dividends paid, yes, indicating a clear affirmative response to the question of whether dividends have been paid. Furthermore, the financial records show that significant amounts of cash were paid out as dividends, with figures totaling $770,744,384.38 and $911,231,488.09 on pages 21. These transactions demonstrate a commitment to returning value to shareholders through dividend payments. That concludes the financial summary for China Merchants Securities Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.